I can't take no loss. I don't even know what it costs. I hit the ground, then I go off.
Hi, and welcome back to The Conscious Day Trader. As you can see, we're in a bit of a different background. We have moved house, and that's the reason, one of the reasons that I didn't post in probably what it's been like 7 days or more. And there's Phoenix. Don't do the same. I just closed all the trades. I was long on the pound dollar today, and we're going to break that down. And Phoenix, literally, I had the mouse over this area, and he stepped on the keyboard, and he decided to short the pound dollar. So I had to close that quickly, even though it might play out as it looks like it would have been a good trade, Phoenix. It wasn't my trade, so I closed the trade, and he's been a naughty boy, but he's decided to be a part of this video today. So you're gonna see a bit of Phoenix as well. So as you can see, like I said, it has been a bit tough to record any video because I didn't have any setup, anything set up in this house. Now we have a nice setup where everything feels more familiar with how I run things, and I've decided to record today's trade. We're going to jump onto MT5 so I can show you exactly what the trade was, and then we're going to go on to TradingView to break down the entries and the bias and all the good stuff that we normally do. So if you're new to the Conscious Day Trader, I am an ICT trader. I definitely trade ICT in terms of my entries, how I analyze my bias, but I also have a lot of knowledge from trading for the last one and a half years with the Scruffy Trader. If you don't know who the Scruffy Trader, go and check out his YouTube channel. He's taught me everything about how to manage risk. And even though I've changed my way on how I do my what I call repositioning into a trade or out of a trade, he has that's a bit of a evolution of evolution on how I use the Scruffy madness that he has, which is a pound average method, and how I managed to fit that into my psychology, into my trading. Phoenix agrees. So without further ado, let's jump straight into the charts. And even though I can go on forever and you just watch Phoenix and the lovely water in the background, let's jump and see what happened to the pound dollar. Okay, here we are, as always, on MT5. This is today's trades. We made $476, and there were only 3 positions, but I think we discussed it in the intro. Phoenix clicked a sell whilst I had my mouse over the orders, and I just closed that for $6 just to pay the fees, which is $4 for opening a position. So Phoenix made me $2, not bad. So these are the positions, and what we're going to do is we're going to jump straight onto TradingView, and we're going to break down entry, management, exit. We're going to look at bias. We're going to look at why did I long the pound dollar and why that continuation. As you can see in the afternoon, or you can even see now, it's been an enormous run to the upper side on the pound dollar. I didn't stay in for that. I got paid for $476, and we are quite busy currently with moving houses and doing other things, and we did have a little bit of my wife had a little bit of an allergy, so I had to deal with that last week, hence why we didn't post quite a bit, but that's life. And we couldn't trade for a couple of days. This is the fibers dashboard. If we go down to, obviously now we had the big celebration of getting the next, we've now trading a 200,000 account. We had the withdrawal issue, which I've got in contact with the fibers and they've sorted it out. The reason is that any amount above 5,000, so 6,000 and up, you would have to put an invoice in, and it's really quick. It's just a different process for requesting bigger amounts than 5,000. If it's at 5,000, and that's what I'm aiming to do, I'm going to be withdrawing 5,000 every 14 days that they allow, just to make that process easier, and I don't have to do the invoicing. But this is the funded account. We're already 9% up towards our next milestone, which I think is going to be 250. So we need to make 10,000, so that's probably going to take a little bit above a month, or we'll see how we go. But that's the aim, and you know what the target is? The target is that $4 million account, which we're gonna pace it. We've been doing challenges like these. Well, not challenges. These, as you can see here, is a funded account. Started on 100,000K, and every 5% they increase the amount that they've given me to trade. And now we are at a level where I think we are getting that consistency. We're still running on all green days since January 1st. If we jump onto Tradesync, you will see this is the last month. This was the incident with my wife, and we needed to run to the hospital. She's all good. Everything's fine. So we couldn't trade 1, 2, 3 days. So I'm confident that we would have hit close to 10K a month. But that's for the history. We're going into, I'm super happy with an 8K month. I'm not being greedy here. But next challenge needs to be 10K if we want to do it in a month. So that is the thing with getting a bigger account and trading the same lot size. Obviously, there's going to be a cap to how, I'm making about 8 to 10K per month. So that's going to take, I would need do that until I get a little bit of a bigger account. I've heard that now they don't limit the 10 lots on the boot camp. So I need to confirm that with one of the fivers, but that will be interesting because then I can trade a little bit bigger, but I would have to leave a little bit more money into my account to make sure that I've got enough to trade it. And at the moment, as you know, I leave about 10,000. So even if I'm risking 2,000 and a half per, I use my risk management is 2.5K per any trade, and that means that I would give away roughly about a week's amount of trade, 2,000 to 2,500, and I'm happy with that, to give back that for my way of trading, and that works for me and my management of those trades. But with the new lot size, what we can do is instead of trading one lot, we can trade 1.5 event potentially soon. And that way we can, as long as the bigger account, the other idea that we've had, and we've discussed it, is that I'm going to be doing a copier account, which is going to copy exactly what I'm doing here. It's just going to be a different account. Ideally, I would want it to be the fiver, so we did the same spreads, but that would mean I would have to do another instant fund. I'm still debating that, to do that or not. At the moment, I've got another Blackpool account, which the spreads from my entry to that, even though the entry is very quick, obviously there's different pricing and spreads. So it works out that I lose about, the difference is $100 of profit. So if I've made now 476 on this account, my other account would have made roughly around 350. So there's a bit of a difference there, which I need to see if I'm happy with that, or do I. But saying that though, the risk decreases on the other account, because when I'm down, I'm also down less, if that makes sense, by $100. So all that is sort of my progress. I know some people are looking. I didn't post for 3 days, and I got so many messages that people thought that I had a red day and I was having a panic moment that I'm not going to post anything. Nothing like that. We did have a panic moment, but it was life-related panic moment. But everything was fine. That's why I missed these trades and I didn't post anything. But that is a good realization, and I'm going to stop the monologue and we're going to go into the trading stuff. I don't want the pressure to post every day, so I'm gonna be posting when I can. Obviously, having a kid and Phoenix to take care of takes a lot. So when I'm ready and posting, I will post, and when I think it's the good time for me to post, I'm not going to put that pressure on me to post every day. And I hope you still find value from the days that I do post, like this one. So let's jump onto TradingView. And what we're going to do, like every time, we're going to go back to identifying a bias for the day. But let's go back to our good old dollar index. And there's a reason for that. If you've been following the dollar index, and if we jump onto the daily and we take away today's day, we had the previous daily high and the previous daily low set on this from the day. We also had this gap here that hadn't filled. Okay, so now if we take away the replay, it will be obvious. We had this spike up that filled the fair value gap. And if we go to, in terms of hours, what time that got filled, we'll find that this is 5 a.m. my time. So if we go to London time, so that filled about 11 o'clock the previous night. So that pushed up all the way up and failed to break the highs of here. What do we have above here that we already know now? We've got buy side liquidity above here and another buy side liquidity from a big move above there. So we can change these to look for the graphs to look nice. Buy side liquidity there and buy side liquidity there. Bigger picture, is there anything else that the price would be targeting? As you can see, this is a strong area because we had a drop down, created the low, came back up, just tapped above this area on buy side liquidity here, and then came down. And this is the next level that potentially the price would want to come back to. If it was going to come to the upper side when this was pushing up, that's what you would be thinking. Which fair value gaps are being filled and what move is the next logical move to take out liquidity. Since we took out liquidity before this previous high, the next liquidity area would be this previous high. So if you're risk managing going short, this will be the area of worst case scenario where you can see the price coming up to. And if you see that in terms of pips, that's around on the lower side, 190 pips. So not unrealistic levels that can go and trigger. If you look at the price on the other side that it crashed down, we can see that it did from Monday 5 o'clock to down here, it did 0.73% down compared to an increase that would have been on 0.20%. So totally in the levels of the reach that we were looking for. And if we look at the dollar index in a bigger picture, you can see we've been on that downtrend, filled up the fair value gaps on this side, pushed down, came in, created that, and touched and this is where I love ICT and explanation of ICT. I haven't found anything that's given me this accuracy in terms of to the pip on a daily. Yes, scruffy like levels work to the pip and the similar style, different terminology, but this is just crazy. This daily level here, this fair value gap, is come down, back down and touched it to the pip on this fair value gap, and then it came back up, created it down, didn't break the low of the fair value gap, created the previous daily low, and now pushed up and took out what we've been discussing about, that gap, the physical gap on the dollar index. Remember, we're trading the pound dollar. All we're analyzing at the moment is the dollar index. And that helps for you to take an understanding of what the dollar index might be doing compared to the pound dollar, which you potentially, if your dollar is going up, that will be the opposite for your pound dollar. So I was long on the pound dollar, and it came from filling this fair value gap and being above the previous daily high. So we're trading above a previous premium. So above the equilibrium here, we're at premium and in the green zone. This is from the ICT 2022 mentorship. If you haven't seen that, I would definitely recommend going and watching that. And you will know what we're talking about. This is the previous daily high on the daily candle and the previous daily low, and that's the equilibrium, which is the 50% of that move of that previous day. And these are areas that get respected very, very, very closely. And you can see that here. It touched the equilibrium, and this is live now. And then it's pushing up. Is there any fair value gaps that it filled on the way down? Yes, it filled this fair value gap here. Where did it stop? That fair value gap from that wick there to that wick there is exactly on the previous daily high. So this is not random. Algorithms work in a way that is specific to price. You see that's to the pip. Came down, next target was equilibrium, touched equilibrium, and now it's getting retested on the way up. So that's on our dollar index. How is that affecting now? So from the dollar index, we were in a premium area. We looked the gap, filled the gap. So we wanted to see a drop in the dollar index. That means that we're going to be long on the pound dollar. So let's go on the pound dollar. And I've already placed the previous daily high, previous daily low. And what we're going to see on a bigger picture, if we go on to our daily, we have that bigger picture that we've discussed. And I've confidently expressed, if you go back to the videos, I think weeks now, that I strongly believe that this is an area where we're going to come and retest. And my bias has been generally on the long side for the pound dollar until these equal highs and buy side liquidity above this area is being reached. Then I would need to reassess what's happening on the trade. But for now, this is a slow push towards that area here. Yes, we have areas like this daily fair value gap that the price can come and retest before it goes upwards, or all the way down here where that fair value gap from that wick to that wick, originally from this area, hasn't got filled yet. And what that might be a draw for the price to build up liquidity before it delivers a price above this area here. Why is this area important? Because people that be going short here have been setting their stops above here or here. So these areas are very attractive. Remember, like we said, double tops patterns, and people will be shorting that. This is where patterns, I'm not a huge fan on just following patterns like flags and patterns and seeing. This is an example where a beautiful double top never broke below this sell side liquidity to deliver price. It's coming now to do a triple top, and someone might say that's another pattern. Okay, so that's where we are. So we've got this. We've seen the price come down, and as I was seeing we're going to go into the shorter time frames. We were in previous daily low territory. We were discount area, which I really like. If I'm going to trade that into the gap, like we said, that's pushed into the gap. So it's dropped the dollar down. So let's go to our trading arena. I got a bit early into the trade. I got into the Asian session. I was watching this. Let's have a look on the actual trades. So my trade was 122.975. Okay, so we've placed our worst entry and our best entry. I believe that this was the break to the upper side. We had a break of structure, so you can see that here, and that if you see that on the 15-minute, it's very highly likely that you're going to find a setup that is going to give you an opportunity to get in with trading the ICT concept. So we had we're trading in previously in discounted area. We're below the previous daily low. It pushed down, created this low, then came up. Someone could have got in those waves. We saw that extensive candle here. That's when I got interested and saw that move, came back, filled that fair value gap, and that was probably where I got in, and with a bit of slippage. So that would have been like 1.5 to 1.8 slippage. So then I had to manage this position. It came down, never gave me profit, just a little bit of profit there, and all the way down, broke sell side liquidity here. So it took that area out, and that's going to be our sell side liquidity. Consolidated around that area, and I was waiting for an opportunity to go, another opportunity to go long. This consolidation, this area here, is something that I like to see. You see that we had an aggressive move, retested on the upper side. Someone can say it filled that fair value gap if you're going short, and it would deliver that short move there. then had a consolidation, and then we had a break to the upper side. I was convinced that this is going to be going to the upper side, and I was happy to get a secondary position with a spread of my first position to 20 pips. So I was down $200 at that point with this one, and then that would be giving me the opportunity to get in. Came back to this. I believe I got out on the second high, these above these highs here as a target. So that would have given me about 10 pips, a little bit higher. I think I targeted this one for these ones. So 16 pips, and I was out. Now, obviously, like someone said in the comments, there's no point seeing what would have happened if you have kept that. But it's good to see that it targeted equilibrium. And our idea from the dollar index moved all the way to filling the gap, then pushed down, and both the dollar index, obviously, and the pound dollar have now delivered equilibrium. And this is an area now where you have to wait. I like trading these extensions. The price, is very discounted. It's pushed below, massively below the previous daily high. It's given me a nice setup. I don't mind waiting to get into this, or getting in a bit early if you want. You have to manage your stops. So like from this entry here, 22 pip stop is very normal for me. I don't get nervous about losing $200, or even if I have two positions on $400. As you know, I am willing to risk $2,000 to $2,500 per any trade, and we're running on all green days. And actually, this is the time to celebrate 3 green months in a row without any red days. I think that is a solid achievement. And as you can tell, I am a bit tired, but on other occasions I would have been more excited about this achievement. But we're still super happy with that achievement, and we're going to try, like we said in previous videos, to see how far we can go. Can we do a whole year? I don't know if that's been done. That would be like my own little mini record that I would be breaking. I wonder how many people have managed to do that. This is another area here. So look at this. Now this is live information, and a lot of people, you said, I really like when you were doing this live and I could see what you were looking at. So let's zoom in a little bit so you can see the candles. This is on a 5 minute. Let's go to the 5 minute. We've touched equilibrium. Where's the next logical price that is going to be taken out? And just go to your left side and you can see we've now filled these fair value gaps here. Let's zoom in a little bit. That's the most obvious there. From that wick there to that wick there. Drag that across. And that filled there. And if you push it up to the first fair value gap, which is not the most obvious, but you can see there from that wick down to there, you will find that took out that fair value gap, and now is retracing possibly to find that previous equilibrium. And as you can see, it started building a fair value gap for the long side between this wick to this wick. So potentially price will come down here, fill that fair value gap. Let's put that in. This fair value gap is going to be filled to push higher. Where's the next target if this is going higher? Where's it actually going? My bigger picture, where I'm thinking it's going, is that buy side liquidity. Doesn't mean that it's going to do it today or this afternoon on the New York session. But the next obvious area is these equal highs here. We have so many equal highs above this area here. If you want to include this move, all this area here, you would add that as a buy side liquidity and target for this long position here. Why? Because this move has been trailing their stops above this area here, and it makes it an obvious area where you would go. Now, if the price fails to break these highs, the next obvious area is to retest equilibrium. And these are opportunities. So if you're short in the market, that would only give you, let's see, from that top of the fair value gap there, that would have given you 15 pips. That's not bad. shorting that opportunity. Yes, that might come in, fill that fair value gap and then push to the upper side, but obviously there is a nice little setup if you don't believe that if your position is short, that can do that. Where would be your worst case scenario? Worst case scenario would be breaking the previous daily highs as a minimum. So how many pips away, if you're trading from here, you have to deal with a 34 pip. If 34 pips is too big for you, that means you have to wait for a different opportunity. You might have to wait for the price to come up here and test that buy side liquidity, because then you know there's going to be a reaction. So from that buy side liquidity, you have to deal with a 25 pip. And you do the same thing. If I can't afford 25 pip stop loss, then I might need to get in at a different area. Where is my obvious area if I want to short the market, where I want to go? And there's a nice fair value gap there. So if we add that fair value gap there, like that, it's not exact, but I want to just show you, but let's do it exact. We should do. There we go. So I'll drag all the way the fair value gap so we can see it, change it to, this is a 5-minute fair value gap. And what do we have here? Now we're looking at the top of that fair value gap is 10 pips. And this might be a trade that you can take. Why would this be a better trade? Look at the risk, if you want risk. This is doing exactly what we said, is retracing back into that fair value gap. But if you can't take that risk and you can't manage out of this position, why not wait and take the next one? Because this is heavily pushing up. What's the chances when it's been buying the whole morning session that it will be retraced all the way to itself without giving you another opportunity to go short if you want? So that's what my thinking is. This is, I'm telling you, for shorts, in terms of, even though I'm long biased, I can find a short position trading this area here. This is how you manage your risk. Like, this is your first interesting. You've got a concept here that is filled the fair value gaps, and I'm going to be shorting that. If I can't do that, I've got buy side liquidity that's going to be tackled here. Where's my worst case scenario? This previous daily high. And where's my really, really bad scenario is that it all goes all the way up. Why up to that pink area? It would go up to that pink area because we discussed about these equal highs, and now it's creating a third attempt to go to that buy side liquidity. And there you have it. That's a breakdown of my entry, my exits, and how I look at them. Even look at tape if you want on fresh data. Let's go down to the 2-minute for a second to see what's happening. And we were on the 5-minute, so you can see now this price coming back into the area that we labeled. And if it happens whilst we're closing this video, it will be interesting to show you. You will see the price, it's either going to tap the top there. Actually, it has done that already. I just haven't put my fair value gap very good. There we go. So that's the area there, and that's the area there. Now it's come back it's actually potentially tapped to the tip pip, and it's having a reaction. That's the first fair value gap. You would want to see that fill that fair value gap on your second for potential entries on the long side. And this is how I manage every single trade, how I read my trades. Now, if you haven't done already, make sure you subscribe to this channel and leave a like, because it does help. And also follow me on Instagram, which is the Conscious Day Trader. As you can see, we have a different look now. I'm super happy with the setup, and we've got a bigger desk. Pool is slightly bigger as well, and we're closer to the beach. Living the dream, as you say, as long as we get healthy from allergies. I hope this has been good and you've learned something, or it's at least been entertaining. Make sure that you do all your own analysis and any trades that you take from my sort of, if you want discussions around what pound dollar is doing and what the dollar index is doing, make sure that everything that you trade is your own managed trade and risk. Don't take any of this as advice. And that being said, we're hopefully going to record another video. We've had a good start to this month, and have a good night or morning wherever you are, and I'll see you next time.
I can't take no